there's a lot of decline in volume and decline in price. That's actually bullish price action. Bitcoin is actually showing some strength. SPX, those rejections off that trend line have just been so clean. It's not looking great. There's no volume, though, to really kind of shove this down. There is support at 3,900. So it's limbo. I mean, it's been a market that can't make a decision right now. I don't know how you feel about it, but that's kind of how I feel.
I'm torn about it because picking bottoms is kind of a fool's errand. Secondly, when something goes to 70,000 and back down to 17,000, thinking of a stock, it's usually done. It's usually game over. This isn't a stock. This is more of a huge, not even sector theme, but just like huge macro change that's happening. And so do I give it a pass because of that? The answer is yes. It's also done this 3 or 4 times already over its cycles, right, since 2011. And then lastly, I think the risk reward is excellent at these levels, because if you do subscribe to this isn't a stock, this can at least go back to what? Its old highs, and people have price targets, many multiples higher than that. So at this point, you're going to lose 17 grand, or you're going to make what, 80 grand? I mean, that sounds pretty good to me. I'm still a believer. I still think that dollar cost averaging right now is the way to rock, because if you're not a trader, putting in whatever you can afford to lose every month is the way to go. This thing might take years to play out. If you are a trader, I would be certainly buying at least a third at these levels. That's my opinion on it.
With Bitcoin, I think Bitcoin especially, it's an accumulation zone. Altcoins, I'm absolutely more hesitant. I do have some high conviction plays on the altcoin side, but I also think that, in a bear market, you don't know what altcoins are going to come out of that. It's always a lot more risk to invest in altcoins on the very long term in a bear market, because you don't know all the time how much funding they have and if they're going to make it out on the other end. But like with Bitcoin, Ethereum, this is, I feel if you have some cash on the sideline, to enter a third position here is definitely a really good move. I think I totally agree with you.
So that goes for Bitcoin and Ethereum. When it comes to the alt, I spoke about relative strength before, and the ones that you can actually hear about doing good things, building, their teams are still strong. I mean, I'm hearing good things still about Polygon and Matic, some mixed stuff about Polkadot. Ripple's obviously in the news, so that's headline driven. But you can kind of tell which ones, when another leg does go higher, are going to lead it. I think Polygon's definitely one of them. When I'm talking about kind of like the main alts. A lot of what I'm hearing on podcasts, a lot of what I'm reading is equating crypto with SBF and FTX, where if you're truly a believer in crypto, they really have nothing to do with each other. I mean, obviously they do, because FTX was a crypto exchange. But if you're in crypto for like the real purpose of having a separate alternative to non-centralized entities, no matter it being a government, currency, an exchange, whatever it may be, this is just a bad actor, right? And we've seen bad actors before. I think it's kind of getting a bad rap because no one said that the stock market was garbage because of Bernie Madoff. But when it comes to crypto, people are saying that, right? They're saying, you see, all of this is a scam. Regulation is the reason that this is happening. When in reality, Sam Bankman-Fried is a person who started an exchange who was fraudulent. So why that's weighing in so heavily, like I'm saying why, but I know why, but it shouldn't be weighing in so heavily on the overall crypto market. And I also think that is why on this bad news, you're seeing some of the main tokens stabilize, like Bitcoin and Ethereum, right? They have stopped going down. So I think people who have been in crypto for some time now, who are educated about it, actually get that point. I think people who are kind of have like one foot in the door and one foot out the door are the ones who are like swept up in the headlines and being like, I guess got to wait and see. And then you have the third, who are the cohort who always hated crypto, and now they're just stepping their foot on the gas, saying like, I kind of told you so. We need regulation, we need government, we need centralization, we need all this stuff. And then I'll kick it over to you. But the reality is if you want to self-custody your own assets, and I'm not saying this stuff is simple, but it is doable. And the alternative is what? Go with a centralized entity because it's more convenient, and this kind of stuff could happen, but it can happen in other places besides crypto. So if you take the time to educate yourself on self-custody and you use DEXs or decentralized exchanges, your risk of these things happening are not there. There are other risks, but not these risks. What do you think?
This is an argument against centralization. Centralization is what failed here. Centralization is what's failing right now with other exchanges, other custodians who have now taken assets and have leveraged it. If you look at the money that's been lost in DeFi versus the money that's been lost in like Celsius, in the centralized exchanges and the custodial houses, it's like 10 to 1. The problem isn't crypto is broken. The problem is we attempted to create more access for the average client through centralization. And the centralization is failing. These centralized entities have taken advantage, in my opinion, of the retail investors' money and now trying to promise, extraordinary yields, which people were asking some questions, but they were going along with it, and BlockFi and Celsius getting 10, 20% off stable coins. How are they doing that? And there's always a saying, if you don't know where the yield is coming from, you are the yield. The retail investors were the yield trying to prop up all of these centralized entities. So this, if anything, this is an argument that we need to move in a decentralized way. Centralization is what's going to fail. As far as crypto goes, it's not broken. Here's another good analogy, I think, of a bank. Say we translate the analogy of FTX actually being a bank. We had, in essence, a banking institution fail. The dollar still works. We had a crypto institution fail. Bitcoin still works. Ethereum still works. So all of the fundamentals are still there. We just saw a centralized entity fail. And when this happens in the regular markets, we just kind of move along and accept it. This is also, obviously, it's psychology. And trust, I think, is the major issue. Is there's so many people who don't trust this yet. It's still foreign. And that's why there's a lot of skepticism and there's a lot of negativity around this right now. So that's how I feel.
Well, crypto was born from a lack of trust around centralized institutions because of the 2008 housing crisis. And then all it was doing was turning itself into the same exact thing until this all got exposed. So it's almost a good thing, because it's like the whole point of why it was here was going back to some form of what it didn't want. You can also follow what people are doing versus what they're actually saying to realize that crypto is not going away. It's almost like the sneaky way that the big institutions are using to build their positions, which does happen. So what's really happening? JP Morgan Chase is building out huge infrastructure right now for crypto. BlackRock is allowing crypto in their clients' IRAs. So how are you saying that this is all a fraud if the biggest players are actually still building throughout this whole thing? Stevie Cohen and Point72 is developing a derivatives desk for crypto. It's almost like, and this is pure speculation, the big guys missed the first run, needed a reason for this all to be slaughtered so that they could get in at better prices and be there for the next run. I mean, who knows if that's like a conspiracy theory or my opinion or whatever it is. But the point is, if you're just looking at headlines, it looks like it's all a fraud. But if you look like what people are doing who are educated, who have been in traditional finance forever, they're making more and more headway and more investments into the crypto space, regardless of where the prices go.
I don't know if you saw this. Larry Fink spoke at that New York Times, I forgot the name of the event, but he was there. He made this telling comment, and I was like, wow, I can't believe he's saying this. He spoke out in favor of decentralization. And he welcomes that in crypto because they were asking him about his investment into FTX. BlackRock made about $24 million investment into FTX. And, he didn't go out and really bash the whole space. He's like, okay, I think this is an argument for the decentralization. And he's like, he supports the idea of a distributed ledger. And he sees the value in that, even from BlackRock. And I think Andrew Ross Sorkin asked, well, aren't you a custodian? Is that making you nervous? And he was like, absolutely not. He's like, we're not really a custodian. They act as a manager, but not a custodian. So he's like, I'm not worried about having the open public ledgers. He sees it as a way to decrease all the friction in the financial system, lower fees, and actually increase the velocity of money. Hearing somebody say that, who's not ingrained in centralized institutional finance, I thought that was revealing too.
I minted an NFT for the first time in probably 2 or 3 months. Tim Ferriss's COCKPUNCH collection just minted today. So we were on the allow list for that. Crazy name, but Tim Ferriss is a guy who, I've been following for years. So I think it's worth it taking a flyer on that. They minted for 0.3 ETH. They're trading at OpenSea at 1.6 last I looked. So
that's great.
There's definitely some people flipping it out right now, but I'm excited to see what he kind of comes up with. Kevin Rose is his boy. Moonbirds was a success, or is in the process of being successful relative to the other ones. So it'll be cool to see what Tim Ferriss comes up with. I also think that the CEO of Alameda,
Caroline Ellison,
so she was spotted in New York.
She's looking for representation. And there's rumor she was inquiring to be represented by Pari Bahara. I think that's how you say his name. So remember him. He was an attorney general for the Southern District of New York. and he is the biggest prosecutor of financial crimes in history. He was a legend. So now he's evidently at a law firm that they defend people now on the other side of it. So there's rumor that Caroline Ellison is going to flip on SBF, and now someone like him might be representing her in this whole thing. And I mean, there was nobody who was more successful. So who knows what she's revealing? He might be her defendant and might be able to kind of share the story here that we're all kind of talking about. What are the details of the possible fraud in the whole FTX scandal? So I thought that was really interesting.
And there is something else that I'll say. I think we do fall into the category of being plugged in because we're all over this stuff pretty much every single day. But we were involved in every single aspect of crypto that has kind of not blown up, but had something negative associated with it and gotten out unscathed so far. Like, so the funds and the fund that we have at WeKo was involved in Luna. We sold it though. We didn't wait for it to go to zero, right? Within the first 2 days. We had money in Celsius, took it out before that went under. We did have money in Gemini Earn, withdrew Bitcoin, withdrew all of our coins. I left in our Gemini USD, which was earning like an 8% yield, which is the only thing I actually did leave in there, which now we can't withdraw because they paused, right? But that was like a fraction of worth of the coins we had in there. So the reason I bring this up is if you kind of are paying attention, there somehow are like little signs that you pick up on before all these things really crap the bed. And so, you know, that's just more for paying attention to things that are being put out on Twitter, listening to podcasts like this and talking to people, because, you know, if not, there are plenty of funds who had the majority of their holdings like in FTX or in some of these platforms. What I've done for us and for my personal coins so far is I've taken everything out, I've put it on a ledger, right? And then I'm interacting with what I have to interact with from there. And for the most part right now, it's kind of just wait and see also because, you know, Bitcoin's going from in a $500 range as opposed to a $5,000 range. So things have slowed down, but you know, at least when you have it in your ledger, you have much less to worry about.
I practice the same thing. I mean, it's great how we communicate all the time. I'm plugged in nonstop. And it's the reason why I haven't gotten wrecked, honestly. The one thing that you can't do in this market is be complacent. And normally if there is smoke, there's a ton of fire. So it's like, you can't be overexposed in any one direction. I feel like you can't never be totally out of the crypto market. There's always a bull market somewhere in crypto. It's small, but it's always there. So I feel like it's foolish to not have any exposure. And then it's also foolish to not have any funds on the sideline. I've really had that balance. And then also too, just the best, you know, skill that I implemented, the best investment that I've made is in trading and really understanding fundamentals of trading and knowing how to enter and exit positions, how to scale out of positions, how to scale into positions, how to mitigate risk. That's probably my best skill is risk management, and it's a natural thing. I am aggressive. I am a degen. I have that mentality, but I also always have my feet on the ground, and I think that helps me get exposure and see gains, but then also help try to mitigate losses as well.
How do you put risk parameters around your trading? What's your method?
I really highlight support and resistance zones and supply and demand zones. So say I'm buying a spot position. I'm not going to buy in a supply zone. I'm going to buy in a demand zone where there's a lot of buying volume. I'm going to buy there. And then, you know, I'm going to always scale out 50% of a position if I ever do a 3X. So 3X is when I scale out half of my position, and then I do half every additional 5X. That's in a bull market. I'm entering and I'm scaling out in supply and demand zones. So I will enter half of a position into futures trading. I normally use about 10X leverage, and then I put a stop loss where I'm risking only 1% all the time. So now my risk and reward is at least a 5-to-1. So I love being in that kind of ratio where I'm using leverage, which is risky, but to mitigate the risk, I use the stop loss. So people swear against leverage. However, it's a great way to not expose yourself on an exchange, having all your funds on there, to use what's there to help you get a stronger position, a bigger position. But then you mitigate the risk of having the leverage to now just having a stop loss to where you're comfortable in the risk. I'm really focusing around areas where most people are buying for longs. I look for trend exhaustion. I think that's one of the easiest ways to kind of see whether a trend is flipping. So now if you're seeing a rise, once you start seeing a trend start to exhaust, and it's a curvature, you start to see RSI breaking down, MACD breaking down, you see price action starting to get a little choppy, volume is decreasing. Those are signs that a trend is exhausting. It might be time to exit a long position, wait, try to confirm a short position, enter that, and then do the opposite on the way down. So that's pretty much how I do it.
What exchanges are you using right now?
So my favorite on futures is BitGet, and it's a spot exchange. They're actually in the auditing process to get fully approved in the United States. They were operating in the United States, and now they're actually going through a process right now. So you technically can't actually use it in the United States right now, but that's been my favorite exchange as far.
So how are you using it?
I've been using a VPN.
I was in Colombia recently and I had to use 2 different VPNs to get the Jet game because NFL is not licensed in Colombia. And that was
really? It's not?
45-minute project for me on Sunday. Yeah. I think I'm the first person to watch a Jet game in Colombia after that experience. So BitGet, cool. I don't think Binance is getting enough heat for what's going on because they have essentially the same exact token that FTX had for their exchange, which is a utility token to reduce trading fees there. And I think one person brought that up. There's so much focus right now on SBF and FTX. Like, why not look at them a little more and see what's going on there? Like, we just automatically, everything is so out of control that it wouldn't even be out of control right now for it to break tonight that CZ was doing the same exact thing and the whole world blows up. You know what I mean? Like, I guess they're doing some kind of proof of reserve for Bitcoin that I read about, but I think there's probably a lot more digging that has to go there because they have an exchange coin. I mean, Coinbase doesn't, and Coinbase is in the US and Coinbase is regulated, but who knows about Binance? And Binance is the biggest exchange in the world, right?
It's the biggest exchange in the world. I mean, if something were to happen with Binance, it would be quite the blow. The thing that I'm also worried about is Tether as well. I mean, there's a lot of smoke there. People have been talking about Tether since 2018. It's not anything new. All the suspicions there. And I mean, if you look at them in interviews, they don't look good in interviews when they dodge the question about, okay, when are you going to submit to a formal audit? You don't know anything about them yet, but it's this $86 billion behemoth that is, again, and especially in derivatives trading, if you are engaging in futures and options trading for altcoins, you pretty much have to use Tether. So like if you want to use any other stable coin, you're pretty much only allowed to trade futures and options with Ethereum and Bitcoin. So there's a lot of people who are using Tether for options and futures trading for all these altcoins. And, we don't know.
What do you mean there when you're swapping into a stable coin? Because there are other options.
Most people like to trade options and futures with stable coins. So, when they exit a position, they're not in a volatile asset, they're in that stable coin. A lot of people do Bitcoin as their trading pair. So now when they're trading futures and options, all their profits.
Tether. You're saying for the majority.
No, just or against other cryptos. So now any profits they make are in the form of Bitcoin.
Yeah. But why not just use like USDC or DAI or something, right?
Yeah, so they just don't have as many trading pairs. It's the only reason. I have USDC on BitGet, so I can pretty much trade Ethereum and Bitcoin. I can do futures trading with XRP, and I believe there's maybe 2 other ones. I forget because I really only trade futures with Bitcoin and Ethereum. I have seen some juicy setups, especially with some altcoins, especially if we go down. Matic is the one that I've been looking at as a possible short. We're in a supply zone right now. And if you look at where the demand zone is, where the most buying volume for Matic is, it's around 25 cents. Now we're talking about almost a 70% drawdown from where we're at here. That would be a hell of a trade to make. Again, I don't know if it's going to go down that far, but you never know. It's an altcoin. It can. That's an example right there of an altcoin that I would be looking to possibly short at these levels right now.
I like Matic here. I think its relative strength is better than Bitcoin and Ethereum. So I think for the longer term, that one's going to have a decent pop when we get going. And I don't know when that's going to be. And I think the high is 250, right? So I think that might be a double.
I'm super excited about Matic. One of the narratives that is really underplayed with Matic is their presence in the gaming community. There's a lot of gaming independent studios that are starting to work with Matic. And the fact that also JP Morgan, they did the first DeFi transaction on Polygon as well.
Starbucks uses them.
It really is, it's making a lot of noise.
I'm also hearing a lot about these ZK rollups. And I don't know if Matic plays into that, but I think they do.
Yes,
right?
Absolutely. Yeah, they are playing a role in that, and you have like layer 0, which was, unfortunately, that was kind of incubated by FTX, but that and Starknet, those are some other big players in that space. We don't know what's going to happen. There's some interesting layer 1s that are really coming out now too. I had mentioned in our chat A0. I'm really big on them. It pretty much helps solve the blockchain trilemma when it comes to the security and the scalability aspects of it. Because normally, if you have a layer 1 blockchain, you're kind of sacrificing one thing or the other. For example, like in Solana, you have all these transactions per second, but you struggle with the security and the throughput issues. So A0 has a phenomenal team. ICP, they actually did a study, an audit on them. That's like top 3 scalable blockchains out there. And that's a protocol that's kind of been thrown to the side and no one's even paying attention to that. So I see an opportunity for that in the bear market to scoop some of that up too.
I think that's a good place to wrap.
Sounds good. It was great talking to you as always.
Yeah, absolutely.